Welcome back. Let's get into your market news now. Asian markets mostly fell on Tuesday morning as the charging of Chinese giant Huawei in the U.S. casted a shadow over upcoming trade talks, while investors were also taking the Wall Street sell-off, which was fueled by concerns over corporate profits. Now, a busy week across the globe got off to a nervous start, with companies citing ongoing weakness in China as the reason for a dip in profits. Tokyo's Nikkei managed a slight gain to move up to 20,644 points, while the Hang Seng, however, slipped 0.3%, ending the day there at 27,501. The Shanghai Composite pegged back marginally, ending Tuesday's trade at 2,594 points. Over in the United States, where Wall Street ended weak on Monday after warnings from Caterpillar and Nvidia Corp added to concerns about a slowing Chinese economy and tariffs taking a bite out of U.S. corporate profits. The Dow Jones Industrial fell 0.85% to 24,527 points, while the S&P 500 was 0.75% weaker at 2,643 points. Then the Nasdaq Composite as well, losing over 1% to 7,085 points at the close of trade. It's been a mixed picture across the board for the South African oil share as well. So an interesting mark across that spectrum. Some green, however, coming to the fore today. Nearly 1% gained on that front. Of course, banking stocks seemingly taking a good number there. And we'll chat about exactly why on that front, of course, in a moment or two. But for now, let's unpack exactly what is happening with regards to the local and European markets. 1361 for the rand. We'll get to that picture, but one that is key and quite significant, of course, is ABSA. Let's chat to Chantel Marks now, who is from FNB Wealth and Investment. Chantel, thank you so much for the time. Let's talk about that big announcement now. Maria Ramos deciding to step down. She's been at the helm for now 10 years, it would seem. And is it a decision you think that the market is going to continue to like? It seems to be up around 2% today.
Yeah, the banking sector in general has received some support from a stronger rand as well as lower bond yields. But the ABSA group is up by more than the rest of the market. And Maria Ramos has been through a pretty tough time. I mean, before Brexit, there was the Barclays breakup. She's been at the helm for 10 years. And actually was there in the middle of the integration with Barclays and then also in the middle of the split with Barclays. So rightly so, she's kind of hanging up her boxing gloves right now. Perhaps unfairly, the ABSA management team has not been as highly regarded as some of the other banks over the last few years. But they have been contending with a lot of politics in the boardroom. So hopefully her successor will have a little bit of an easier time of it.
In the interim, René van Wyk takes that interim CEO slot. A little bit of a surprise that it's not Peter Matlare, who is deputy CEO at present?
Yes, a little bit of a surprise, but perhaps they were opting for someone with a little bit of a longer track record in the banking space, perhaps also just trying to not rock the boat too much in that regard. So René van Wyk has a pretty illustrious career within banking, an ex-registrar of the banks with the SAB, as well as ex-kind of executive at other banks and financial institutions in South Africa, but certainly probably a surprise that Peter Matlare wasn't up there, because we thought he was earmarked as the next leader of the bank, but they might just wait for a little while longer.
Yeah. Well, it seems that the market locally has taken on some positivity. One could say that it's because of those banking counters themselves. But is there anything else globally? I mean, one would think that because of that China-US trade deal, which still hasn't come to a resolution, markets aren't going to be feeling too chummy. But it seems today, however, they're headed in the opposite direction.
Yes, I was quite surprised when I started preparing for this interview and I saw that the market was actually quite firmly in the green and that line was moving comfortably upwards, because this morning there was a real risk-off sentiment in global markets, a lot of uncertainty coming back into the system around the US-China trade war, some disappointing earnings out of the US also having an impact. But throughout the day, we've seen risk-on sentiment returning to global markets, emerging markets generally looking a lot better. The debate in the UK House of Commons playing out around the Brexit Plan B, a possible extension to 2021 for a deal implementation or a final split from the EU mentioned, which would have also been positive for markets. And then, of course, we've had some really good support within the mining sector. Unfortunately, a tragic tailings dam failure in Brazil has resulted in concerns over iron ore and the iron ore supply situation globally, and that has provided support for miners. But really, I mean, everything looks a little bit better today. Even Naspers with 10 cents down this morning, and a lot of negativity around technology shares receiving some support throughout the day.
Yeah, that support also continues then with a better rand, 13 rand 63. Perhaps not its best levels yet, considering it was at around 13.62 even yesterday. But still, seeing it at these levels shows some resilience from that South African currency.
Yes, absolutely. We're almost not used to the currency being quite strong and quite stable. But this January has been quite supportive for the local currency. It just makes it a little bit easier for companies to plan. And it's especially good for banks and for retailers. So, I mean, clothing retailers in particular have been under so much pressure over the last few weeks with the sales updates relating to the last quarter of 2018 really disappointing the market. But what a stronger rand means is that they can import cheaper, and if they can actually push through a bit of price increases, it could be really supportive of margins. So for that reason, we've seen retailers receive a little bit of an uplift as well.
Yeah, I suppose the emerging market space as well, a little bit tentative considering things happening in this space, whether it be Venezuela, whether it be South Africa. Slightly more positive for the remainder of the year, you reckon?
Well, we certainly hope so, but a lot of it will depend on developed market monetary policy. So at the moment, there is a bit of concern around a possible slowdown in the US related to Chinese trade tensions, just a general overheating of that market, as well as the standoff between Donald Trump and the Democrats. And for that reason, monetary policy is expected to not tighten as much as initially anticipated. That is very good for emerging market currencies, and it's also good for global liquidity. So depending on whether or not those factors still support a more dovish Federal Reserve outlook, that'll kind of determine the tone for emerging markets going forward.
Chantel Marks, appreciate your time from FNB Wealth and Investment there as we take a look at that market picture out, of course, at the Johannesburg Stock Exchange. Now, after the break, we take a look at the levels of corruption in South Africa, and we talk to TransUnion's Vehicle Pricing Index and just how things have fared in the vehicle market. Stay with us.